The Federal Reserve reports that 84% of Americans have a credit card. And the chances are, you know at least one friend who says their credit card is the best financial decision they've ever made. However, they likely never talk about how it is impossible to pay off that credit balance to the penny. Everyday Cheapskate reports that credit companies purposely use a different method than normal to calculate interest, so you'll always have a balance on your card that you need to pay off. They use what is called an average daily balance method, which is quite different than interest on a loan. Investopedia explains the average daily balance method is when interest is calculated daily, regardless of when the payment is made or even due. By using this method, interest payments can rack up overnight instead of monthly, which forces you to continue to have the credit card open with the financial institution and making extra payments. And, with the Federal Reserve reporting that interest on credit cards currently clocks in at 20.4%, financial institutions easily rack up billions in interest, even on already paid balances. So, say you bought a shirt on credit for $50 and you paid off your balance at the end of the month. Your credit card company likely already charged you interest on that shirt for the following month, which you'll now have to pay even though you paid off the monthly balance already. Another dirty trick financial institutions use to take your money via credit cards is telling myths about how a credit score is necessary to buy everything. This couldn't be further from the truth. As Ramsey Solutions explains, all institutions will accept either debit cards or actual cash, so you don't need to pay for anything with a credit card in any situation whatsoever. In fact, another major credit card lie is that getting a loan or mortgage requires a credit score. Ramsey Solutions explains that, if you've never had a credit card, you can still obtain a mortgage, or any sort of loan for that matter, through an application process called manual underwriting. During this process, a financial analyst working for the banking institution manually pores over your finances to make sure they are up to snuff. As US News and World Report explains, manual underwriting can be used by people who do not have a credit history to prove they have the necessary finances to obtain a loan or mortgage. This is contrasted to automated underwriting, which US News and World Report explains only takes into account your credit score. They further explain that Fannie Mae has the option for a manual underwriting mortgage application process in contrast to the automated one. Moreover, JP Morgan Chase and Bank of America, two of the 4 largest financial institutions in the United States, offer manual underwriting as a loan approval process. Another credit card myth is that credit cards provide superior theft protection. The gross majority of debit cards are produced by Visa and MasterCard, and both of their websites state the same fraud protections cover both their credit card and debit card users. In the case of Visa, the lenders are required to pay back the fraudulent purchases within 5 business days of the purchase taking place, regardless of whether it's a Visa debit or credit card. So, if you have a Visa debit card, and someone else buys something using your debit card information, the money isn't hopelessly lost, you get it back just the same. Finally, there are some who tout getting, quote, cash back as a reason to have a credit card. However, Ramsey Solutions explains that this cash back is dwarfed by the interest payments you are making to get the money back in the first place. Further, CNBC reports that cash back cards usually have even higher interest rates than other types of credit cards. Now, how exactly are big banks making money on credit cards if Visa and MasterCard are the main credit card institutions? While Visa or MasterCard may be the card companies, most credit cards are actually issued by the banks. For instance, American Express, which is the 3rd largest credit card company in America, is also a banking institution. Moreover, Wallet Hub reports that Chase, Citibank, American Express, and Bank of America are the largest credit card issuers in the United States. So, you might be wondering, why isn't Visa or MasterCard on the list? As NerdWallet explains, both Visa and MasterCard are not actually credit card issuers. Instead, they are simply the payment network that banks use to issue people credit cards. So it is actually the banks who are perpetuating the scam of credit cards so they can rack up billions of dollars in interest payments accrued on balances. Thanks for watching. If you liked what you saw, please consider supporting me at buymeacoffee.com/morningwoah.